Hi everybody, welcome to the Baguette Investor channel for a new video. Today I want to talk about something that I see happening in the markets and I see people talking about it, but I believe it's always good to share the knowledge we have. I want to talk about inflation and interest rates. So I don't know if you've seen, but inflation is back. Here you see commodities going up, you see retail prices, you see most of prices of goods going up, not really services at the moment, but goods going up. And so yields are supposed to follow inflation, right? So inflation going up means probably yields are going to go up. And that's what we're seeing in most parts of the world. I have here in front of me the United States 10-year yield that you can see it's starting to pick up. One of the most obvious case of yield going up is the Canadian rate going up, trying to test this resistance right there of these 1.62%. I have the German rate testing also the resistance of the minus 0.1. Yes, in Europe the yields on bonds are negative. If you don't know about that, you can read on it. This is pretty crazy. In Germany, there is 5% inflation, minus 0.1% bond yield. You can see something's wrong in Europe, but we're not here to talk about this. Same thing for France. We have 0.2% yield, and you can see they all look like they're trying to go up. Great Britain has broken out. Great Britain yield have broken out of this space. China yields are also trying to go up a little bit. And what does that mean? It means that if for people holding bonds, it's actually bearish. The yields going up on interest rates means the bonds go down. I don't know if you're familiar with it, but it makes sense. If the yield on your bond goes up, it means the bond has become riskier. So people are less likely to buy it. So the price of the bond decreases. I hope that makes sense to you. This is how I understand it. And you can see that the prices of bonds look like they have to go down. So I just wanted to talk about this. I'm not trading bonds at the moment because I'm not going to short bonds. There are much better things to do instead of trying to short bonds at the moment. I don't think this is the thing I'm going to try doing. But I just wanted to share my information. You can see this is corporate bonds on the US United States corporate bonds, and you can see that it's really trying to go down. There are also this is a government ETF, iShares US Treasury bonds. This is a package of different kinds of treasury bonds, and you can see that it's gone down quite a lot since the COVID crash, but now you can see it's trying to go down quite a lot, and I'd not be surprised if we saw it breaking down much lower. It's quite kind of the same thing for Europe. The central bank has been pumping the bonds. This is the iShares Core European Government Bond. This is listed in Germany. You can see that the bonds really are in a big bull market, but with inflation coming and the interest rates that have maybe the opportunity to go up, bonds are in what can look like a top. And a breakdown of this area, the price going down like this, would mean very bad things for bond holders. So I hope if you're a bond holder, you're paying attention to what's happening in the interest rates market and all, and that you're not being passive on your bond holdings. Then it's just very interesting to look at how markets move, even though you're not participating in them, because I do not hold any bonds. No longer. I had a bond fund that I inherited from my mother, but I sold it and bought stocks with it and crypto because I think it's a better investment. Same thing for European corporate bond. You can see that it's really not looking bullish at all. It's breaking down. It's trying to break down. So yeah, there's really something going on in the bond world. Bonds really went up like crazy in the COVID crash. Like this is China bond. Very interesting move up. But now, I'd not be surprised if bonds start to go down because of the inflation we have. Remember, right now, in Germany, there is 5% inflation with bond rates of minus 0.13. Remember that. Goodbye. and thank you for watching.